Hey guys, welcome back. This is Dan Frio, the Mortgage Update, and today I'm going to walk you through getting prepared to buy your first home, or even getting prepared to buy a home. I'm going to walk you through kind of three of the major steps involved in this process. I'm going to reiterate this again. If you would, please don't forget to subscribe. And the subscriptions have been skyrocketing as well as the views. So thank you so much on that. Don't forget to put down in the comment section how you think I'm doing. And also any videos or any other areas of the mortgage process that you would like me to elaborate on. To kind of, too many times there's misconceptions in the mortgage business or mortgage underwriting. And so what I could do is if there's a debate on that as well, I'd be more than happy to upload guidelines for any particular questions that you have, so you're getting it right from the horse's mouth. Fannie Mae, Freddie Mac, FHA, and so forth. So let's get on with this process. So one of the first steps, the three components we're going to cover today is credit, income, and down payment, or lack of. So the first part is credit. That's the biggest piece of one of the biggest pieces of this puzzle. And one of the first questions I ask people when they call me is, what's your credit? You know your credit score? What is it? Believe it or not, 9 out of 10 people know or think they know. And here's what I mean by that is there are multiple credit scores, and there's actually different credit scoring systems. There's a Vantage score, there's FICO, there's a whole bunch of them out there, but I discussed this in detail right here. If you go to my website, themortgageupdate.net, and I just did a blog just recently on this. Did you know you have more than one FICO score? And then there's all kind of other things in here to explain to you different scores, how many scores, and things like that. But I won't get into that detail right now because you can check out some of my other videos and check out my website as well. What I do want you to do, the first step of this process, is go to this website. It's creditscoresandmore.com. And the first thing I want you to do is click step 1. It's free for you. It's very similar to Credit Karma, but it's different. It is not Credit Karma. I find it more useful, has better tools for me personally. I use it personally. And it'll give you a Vantage score. It'll also set you up for monitoring, alerts, identity theft, and a whole bunch of other stuff, and it's free. There are add-ons to it if you want, but you don't have to do that. I would just highly suggest you set up with that system. Now, the next system here is what is your true credit score? What's your credit score that the lender uses? It's not, believe it or not, it's not the Vantage score. And if you want to find that out, this is one of the main areas. You will know what your credit scores are. You'll click here. I would suggest you order all 3 bureaus. It might come to about $45, but it's a hugely valued tool for yourself, as well as you going through this process. You'll know what scores you're working with for sure, because it is the scores the lenders use. It'll give you multiple scores. It'll give you your mortgage score, your auto loan score, your credit card score, and your insurance score from all 3 repositories. That's TransUnion, Equifax, and Experian. So those are the 2 steps that I want you to follow when it comes to credit. So you'll be set up on this system for alerts and everything, and you will know your true FICO score that the lenders will be using. Okay? So the next step we're going to talk about is your income. Your income, this varies, and this is the toughest part, or one of the toughest parts of this scenario. And I won't go into great detail, but what we're looking for here is your gross income, which means your income before taxes. All right. So what you want to do is take your hourly pay, multiply that by your average hours worked. That is your income, your gross income. Then to use bonuses, commissions, any other things that deviate from that, tips and so forth, you have to be on that job for 2 years, and then it takes what's being used is a 2-year average. So we really need to break this down, and how we normally do it, we can send a verification of employment to your employer and they can fill it out, or get your last 2 pay stubs from years ending the 2 years prior to. So that we're in 2018 right now. So a lot of times I'll ask my clients to, if they can, find their 2016 last paycheck and 27 last paycheck and their current paycheck. And I can figure out all the income from that portion there. All right. So that's your income. Now what we want to discuss is your, what they call your debt ratio or debt to income. Okay, that breaks down, and a lot of times you might hear, I was denied because my debt to income or my debt ratio is too high. Okay, a good rule of thumb basically is you want a debt to income ratio of 50% or below. Okay, what makes up that number? So we want to take your monthly expenses, all the expenses on your credit report only. Okay, not your cell phone bills and things like that. Whatever shows up on your credit report. So when that's going back to here, when we did this step, it'll give you all of your creditors that show up on your credit report. Add those numbers up, and then also add in your proposed mortgage payment. And I just put a mortgage payment calculator on the website. That is right here. And that'll give you, it'll calculate, and that'll give you your complete mortgage payment, including principal, interest, real estate taxes, homeowners insurance, and PMI if you need it. Okay? So that is, that's how to come up with that calculation. So again, we want to take all the bills that show up on your credit report, your true credit report. We want to take your mortgage payment, and now we want to divide that by your income. And then the income, how we calculated it, as I said previously. Okay, so that's the income portion and the ratios of how you qualify. Now the down payment, or lack of, I'll say it that way. Down payment varies based on the program that you're looking to go in. And this is where a lot of times guidance comes into play. So for example, if I said, do you know how much you need for a VA loan? Or do you qualify for a VA loan? Or a USDA loan? Maybe a reverse mortgage if you're an elderly person and have some cash. A conventional loan, jumbo, non-QM, that's a big thing coming in right now. It's somewhat like subprime, but subprime really got a bad name in its day. It got kind of crazy, but it was useful in many, many areas. Now let's talk about the down payments, okay? All those programs have a variation of how much money you need as a down payment. The down payment could come from liquid assets you have, 401ks or investments that you can draw off of. And in most cases, you can have gift funds from a relative or family member. That can be used as your down payment. Now, I also have, and if you check out some of my recent YouTube videos, and I think it's under these areas here. Let's see, down payment assistance, grants, and other options. I have a whole section here of, we have about 5 or 6 grant programs to offer you, or offer those that don't have any down payment money. These are phenomenal programs. So if you don't have any money, don't fret. There's options out there to help you, but you have to have, pretty good credit and the income and everything else, all those other number 1 and number 2 that we went over of, you have to have the credit in line, you have to have, a debt ratio that puts you in line, and then we can help you work on the down payment portion of things. So just to tell you a little bit about myself, I want to reiterate, if you haven't watched any of my videos before, I'm a mortgage broker in the Chicagoland area, have been for over 30 years now. I offer all these programs, and basically what I do, I'm a mortgage broker. I deal with over 21 different wholesale lenders. Most of the time what people think of is, well, if I use a broker, it's going to be more expensive. No, it's not. In most cases, I can get you a lower rate with almost no lender fees. Right now we have a special, and it's September of 2018 through the end of the year on conventional loans with a credit score over 740. We're actually crediting you back your appraisal fee. The only fees we have as a broker is your appraisal fee, and I make no extra money on that. You pay exactly what the appraiser charges, and a credit report fee, and that might be in the range of up to $50, say that. Compare that against some of the other lenders out there, and you can do the bank rates and all the other things and check it out. The average fee in Illinois is approximately $2,200, and I just went through mine with you. So, you know, you're maybe looking at $600 at max, and if I credit you back $500 for the appraisal, you're looking at maybe $50 to $100. I do not get paid on your interest rate. I don't make any extra money on that. So my job is basically to get you the lowest rate with virtually no fees if I can do that. So I'd love to help you out if I can. You can reach me at 630-338-1160, or check me out on the web at themortgageupdate.net. And also check out this website, credit scores and more. I think it'll be very useful for you. I have a video that goes over this as well. But I hope you like the video. Please don't forget to subscribe. Give me a thumbs up. And thank you so much. God bless. And I look forward to your calls.